Good morning. Okay, yesterday turned out pretty much what we thought. NASDAQ brought up the rear, so to speak. It led the way down, and it had a pretty good day. Um, Now the S&Ps had the inside day, which is normal after a range expansion day, which big day down there. So yesterday was a consolidation day, a green day, closed above the opening price. Buyers came in, and now it's up at resistance. Factory work. You look to the left. It went down hard, created a void, and kind of did a grinder to the upside. And you can see the blips down. So every day we try and do a little education with these pre-market reviews. But one of the things that was we all have these moments of during our learning curve. And one of the things that was a moment, aha moment, you call it a light bulb moment, whatever, is that higher time frames. We look at this big red bar, like what I'm thinking about right here. And so there's one side of analysis that says the higher time frames are more meaningful than a lower time frame. Well, there's all these different time frames that are going on with each other. Like we have here, the weekly's in an uptrend. The daily is on the cusp of a downtrend. It's broken down through major support, so it's no longer in an uptrend. Here, this one's going up, that one's going down. So anyway, if you have let's just say, the information that's coming together that says overall, especially as a day trader, but it relates to all time frames, that this is a moment where things are most likely to try and continue to move up. Why? Well, prices went down a lot. They hit an area of support. There was an exhaustive kind of a move. So what happens during a bullish period is red bars tend to get ignored. So as I look at a big red bar on the hourly, that's a big down move on a 15-minute or a 5-minute. And that kind of scary. Well, scary isn't the right word. Less probable to turn around. It may take a little time. Nonetheless, when it comes down there's going to be buyers. And if the overall bias, as you see it, and if you're right, institutions could care less how it went down there. They have a bias to buy, and they probably have a guy sitting there that says, hey, down at that level there below 32.60, that's where there's support. I say, put the buy orders down there on the bid. And that's how you should be thinking. And then you just wait to see what happens. So as it gets down there, and then as a day trader, you can then go down to the time frame of choice, whatever that might be. And I guess that's right around here. And then look to see if you get a corresponding or pattern that is confirming what you think is going to happen. And here's where we see a little W bottom messy and then a pullback pattern. So there's your lesson of the day. Don't get so scared of a red bar on a higher time frame if overall things look like they're going to move up. So what about today? Well, it's up at this resistance area here, and it's been rallying for a while, based on making the low a couple of days ago. So we'll see. Some sideways choppy action there. I mean, this was bullish price action right here. And so now as it pushes up here, it's going to have a hard time. So if it goes sideways, that's positive. Maybe it rolls back over here, maybe at 10 o'clock, 10:30. It's heading lower. We'll just have to see how it unfolds. The NQs were down. Now they're up a little bit. They're just jiggling around here. So they showed relative strength yesterday, and they got above now their resistance area. So they've been doing better, and they have room to continue to move up here. So we see this big down move that occurred right there. I say, well, that was a pretty big move to the downside as you started from here, but we see big momentum. And as it came down here, the momentum slowed. Those of you that have been around a while, we do that by just looking at the distance between the lows. So this got closer. It just moved under the low and came back up. So those using indicators, you'll see your bullish divergence there. But if you just look at it this way, that is something you can remove from the chart. That's probably confusing you now. So prices are consolidating here, and they were able to clear here. So what we want to see from the bullish point of view on a short-term basis is that the Qs can stay above that swing low on the hourly chart, which is 11,080, give or take. It'll come down a little hard. That's okay. Now it needs to regain its footing, so to speak. It's on some support. But as it gets below here, it puts in question the thought of going back into the void because it's created a pivot high, a resistance area. And you see, this is how we just step by step systematically create what I like to call factory work. Factory work is good when it comes to the markets, because if you will discipline yourself to do the factory work, well, then the impulse trades don't happen. Well, there's very few impulse trades in between doing the factory work. So it's better than digging ditches. Yep. So I don't, you know what I mean here is that you're doing something the right. Once you've decided on a method of this is the right way to do something, you do that. So the factory work, and you say like, and if you're new to this, you'll say, well, Greg, that makes a lot of sense. Why wouldn't I do the factory work? I'll just say, well, I don't know that I could really explain it to you, but after doing this for several months, you'll find out on your own why you won't do the factory work. That's another conversation. All right, so let's see what the other things are doing here. YM. Been the weaker. You can see the head and shoulders pattern that we talked about. It broke down. It's here, I guess, give or take in the middle of the big bar. And it's moving up. And does it have a void? Yes, it does. Buyers on the dip. Right? As it came down there, the buyers were hanging down there waiting to pick it up. They pushed it back up again, and it's getting a little pullback pattern. So this actually looks okay. Right? And so we don't want to see one market look okay. We want to see multiple markets look okay. So we'll keep an eye on that. And the further this can get into this big red bar and close into it, the greater the odds of this being a low that can be respected as being important. Now, it doesn't mean prices can't go back down to it. And if it does, I'd be more inclined to think a W bottom. And that could be along the lines of, September, October correction and all of that, which we've been talking about. So we'll just see how far this gets. And Steve is asking me, do I have a book or video to learn some basics on how to read the charts? Can't follow your discussion. Well, Steve, just over time, sure, you'll pick up on the lingo and learn. You're probably a little confused since I don't use trend lines and indicators and all that. You're probably used to seeing that kind of misleading junk on charts. But if you go to our website and there's a foundational course there. It's kind of gets into all about how the markets were created, but there's really great basic stuff about how we do things, technical analysis part as well as options. It's relatively inexpensive, and I think it would be a great place to start. And then for $7, you come in the chat room and ask all the questions you want. If you get too annoying, we just throw you out, but I'm kidding. But it's a great place to learn. All right. So Russell broke down, big bar here. It's the weakest. If it can get through here, it's got room to go up. I'm skeptical. Anytime I see a big bar like that, most of the time it's going to stay down in the middle and, hang around here for a while. The longer it hangs around without going up, the greater the probability of it dropping. Oh, we shall see. And bonds are down here a little bit. They've been just chopping around in this range, doing nothing, and they're still doing nothing. But we see topping tails, which means sellers are lurking above. And so far it's holding here. The weekly looks like it can go down, which means interest rates are going to go up. And the market might not like that. Keep an eye on it. Oil is stabilized here. Well, I got to change the contract. Anyway. It came down hard. Recently we talked about the void. I explained why this is a very risky pattern to short, and then you can see why. SPX day. We'll get to that. Thank you, Jake. Gold broke down here. So I'm hoping, right? I'm hoping, because the longer time frames are bullish, that by sometime next week, this could turn into a breakdown failure or a shakeout. We'll see. We'll see. It's got a void below, so it's got to create support. Silver, I think that broke as well. It's sitting on support here. So let's take a look at spiders in SPX. I want to take a look at the Qs for a moment. Yeah, so they spiked down here, and they come up above the high of the red bar, and they've stalled. Where are they here? They went up and come all the way back in. 2, 4, 2, 2. It's right about here. I'm going to watch this. I always watch the day chart, right, which is the Qs 9:30 to 4. I see this level right here, which is in alignment with yesterday's low here. So 271 is going to be a key area. Going to be a key area. Wasn't the same guy as yesterday, but he should know better too. It's going to be a key area for the Qs to hold. And then if not, they're probably going to move lower to some degree. And so SPY. Red bar. Let's call it above 3,600 or thereof. If we can get a strike at, that's what, 3360. There you go. Jake's got it spot on. 3360, 3370, and 3260. I'm not so sure about that. On the down, if things start to roll over today, 3260 is doable. Not doable for the put spread. If things get weak today, I think this could, you got protection at 3280. So the thing to do is this morning, if things turn out weak, go for the call side. Then as they go down and we see that they come down to 3280 and begin to stabilize, maybe then we could go down to 3250 and they'll get the same juice. So that's how I would do it. So if the markets are going to come in, let them do that, and that's how I would handle it. All right, Dan, all yours. There's a couple of questions here that I'll post to you from YouTube.
All right, good morning. All our inventory looks fine. So if you have any questions, just ask me. Tim's looking at AJRD. Says igniting bar here, daily, weekly. It is an igniting bar. The only problem is it needs to rest because there's not what we call a price void. Here's one we did yesterday. Same type of bullish igniting bar, But compare the two. See how this one is breaking out to all-time highs, whereas yours is more of a bottoming action. So, you know, when you got, particularly when you have resistance like that, you got to see if it can hold its gains and go sideways for a little bit. Someone else is asking about Square. We actually have a put spread on this, but same kind of concept. We've been trading a lot of patterns like this past week, but we have favored the ones that have cleared this prior last week's high resistance. Like, well, not coup, like crowd. See, things that have cleared resistance and have a price void. Here was one that our weekend letter. Also, look at this. You got your bottoming action. You got today's Wednesday, so you got Monday's bar, a little downside shakeout, closing right back in there, and we bought it yesterday on a breakout. So I'm just showing you these as superior examples. Nike. No, William, come, no. I mean, what it's blowing away off my daily, weekly, and monthly charts. No, we don't buy things like that. I mean, could it set up as an intraday on a pattern? Maybe, but I would have zero interest in the first hour. I got to see what it does. But no, when I get exhaustive, well, that's not the right word. When I get huge gaps, no, my mind is I'd rather fade them if it sets up. I just posted in YouTube these beautiful 1, 2, 3s right here. Look at this 1, 2, 3 on Nike. Wide range bar, and this is classic. This one taking out the inside bar. Love those patterns. Yeah, hey Alex, I was just about to show you ACB. Oh, it's gapping down. I was gonna say. Oh yeah, it had earnings, that's why. But what I was gonna say was talking about volume. The other gentleman asked about volume in that first stock I looked at. This volume jumps out at me, and somebody emailed me asking about it, saying they've been in it for a long time, you know, been a deer in the headlights. And I said, well, it's still in a nasty downtrend, but I said this big bar and this volume is definitely something to take note of. But now with earnings, it's just getting its head chopped off again. So, but Alex, when you say looks interesting for what? To short it? I mean, it's too extended. I mean, it looks horrible, but this sector has been the most unloved. You would think with coronavirus, doesn't it make sense? Why is marijuana not a stay-at-home stock? You're sitting on your Zoom meeting, and shouldn't you be smoking their products while you're staying at home? I see. That's why I don't follow fundamental analysis. It makes no sense to me. Hey Arnold, your drop down. All right, let's continue. Yeah, look at this little guy. I don't know what is up with SPI, but he is ripping. And it's ripping. You missed the boat. You could have bought a 15-minute high there, even though that, in retrospect, I would have said it's extended, but it looks higher. J&J is, you know, there's some, and that's what some of the headlines are saying. Oh, market up on Nike earnings and positive prospects of the vaccine, and so J&J's talking about it, whatever, but there's zero pattern there to me, except maybe a Condor. Sell out of the money put spread, out of the money call spread. Shop. Somebody emailed me last night about a put spread on this. And I said, no, it's 4 bars up at resistance. And now gapping down 12 bucks. YouTube's asking ANTM. Yeah, that had a gap breakdown. Yesterday's bar, price void, sure. Yeah, I'll put that on my watch list short, sure. ANTM, Tehran, JKS. That is a 1, 2, 3. It is, and it is gapping up. A day trade, if it sets up, would be okay, but swing, we don't take 1, 2, 3s that are this far from the 20. That's just using the moving average as just a veto. But it is gapping up. It is a bullish pre-market. So you know the steps there, Tehran. Put it in a 5-minute window and see how it sets up. Sebastian, what time would be a good time to bring up the subject? 10:30, Sebastian, after the first busy hour. CTOS, 339. Yeah, that's a gap over these red bars. Yeah, it had earnings, I think. I have it in here somewhere in my gap stuff. If not, let me just put it back in so we don't forget. Yeah, it's up here, 448, CTOS. Yeah, that's a bullish gap. That's worth watching. I'll put that in a window right now. Mark, as of today, you can trade options on Snow and Frog. Awesome. Awesome. Frog. Wow, Frog ripped yesterday. That's extended now on the 15. Snow, it's trying to bottom. I mean, look at all these tails. You got 1, 2, 3, 4, 5 tails. So that, yeah, that's a definite watch for a put spread. I'll be interesting to see what the implied move is just for Friday. Yeah, Lulu's on my gap list here. Yeah, but it's a climactic sell setup to run on the 15-minute. So you need to wait. But yeah, it's a put spread candidate, sure. I think the news was they something with their dividend. I don't know. I saw something. Zeke Yandex. Yeah, but also look at the gap and crap on the 15. So that would be, well, it's not going to be a 1, 2, 3 because it's gapping over yesterday's high. So it's not a 1, 2, 3, but you can watch it on a pullback. And that's also a put spread candidate. Yeah, I'll write it down for put spread candidate, UPWK, Natalia. Yeah, I like that. Maybe 15-minute high. I'm not going to be rushing into anything here. We're getting closer to resistance. But yeah, the reason I like this, it's a reverse head and shoulders. You got a downside shakeout, left shoulder, right shoulder. And for those of you in the green room or taking Greg's course, that tail, because it's been consolidating for over 2 weeks with the downside shakeout, it's a bullish entry, 15-minute high. This prior tail, I don't care about. I don't care. So I'm putting that in a window. Yeah, that one looks good, Natalia. It looks good. Tesla for a put spread. Put spread? Put credit spread? No, Ali, there's no pattern. It's rallied up and it's breaking, it's gapping down. It's more of a call spread, more of a bear call credit spread candidate. No way, put spread. Len, I think had Len's a long watch, sure. And another, I have it in my list here. Yeah, Len looks good. I'll write Len down. I was looking at Len over the weekend. KBH here had earnings, gapping down to 40. But retracement concepts, look, that's an acceptable gap. So as long as it holds around 40, 30-minute high, that's a long candidate, 30-minute high. So read my lips. Remember George Bush? Read my lips. As long as we hold above 39.80, I like 30-minute high. Because that was a breakout bar. Now we're gapping down a little bit on earnings. I like it. I'm putting that in a little window. Yeah, there's the ACB earnings. That's a nasty gap under a big wide range bar. Oh, I read Tiffany was laying off some people. Oh, bad news! I read in the journal today about poor Hilton. When I had my former company, we owned a broker dealer firm also in Chicago. So my favorite hotel in Chicago was the Palmer House Hilton. They're filing bankruptcy. The paper said they were worth $333 billion. Poor thing. That hotel is marvelous. I feel bad for him. That's an icon. Also, I read in the paper yesterday, here are SPT that were long yesterday. It's looking good still. All right, KBH is now retracing too deep for me. So I've got no interest. After 1 minute, it's off my chart. Oh, yeah, old, the hotel, yeah. Upworks. Yeah, I'd prefer if it waited to take out the high in 15 minutes, then it's just better. Does anyone remember Sizzler Steakhouse? I grew up in Miami. It's just kind of a downside shakeout. So I read in the paper yesterday that they're filing bankruptcy. Sizzler. All right, this Lulu's gapping too big for me. So there's a lot, retracement too deep. There is a lot. Oh, I sold a put on this yesterday. Remember, into earnings on purpose. All right, look, so look, I'm still hugely profitable because I'm short the $25 put because the gain from the volatility contraction is greater than the directional against me. Yeah, volatility crush. Yep, and it's a nasty gap. I mean, I'd be freaking out if I were long the stock, but look at it ripping now. I'm bidding to get out. All right, let's continue. WOR, no pattern. SRNE for Steve. It's neutral. I don't know. I'm you all saw we were not very aggressive yesterday. I even typed Alex last night. The 3 things I've been focusing on is day trading, put spreads on compelling patterns, and any longs. They're unusually bullish compared to the broader markets. Pins, Steve, I'm not sure what your question is. Pins were already in, and it's a beautiful 1, 2, 3 if it were to close here. All right, I just got filled on my SFix, locked in the profit. YouTube saying Nike, but here BBBY, yes, I like this one. It's holding, it's a wide range igniting. I prefer a 1, 2, 3. Why? Because then I'll have 26 15-minute bars of bullishness. But so Steve, I like this one the best, just not with the market coming in. But I'm going to get rid of my SFix over here because because I'm already out. And I'm going to put BBBY in its place. So yeah, it's a candidate. I like it. And Nike, let's see, somebody's asking. Jazz says Nike is a 2x move. I'm going to buy Delta 50 calls at the open. All right, that's not our strategy. I mean, you're buying very, very, very expensive at the money calls as it's 100% time premium. You are only going to win if it keeps going up. And looking at the pattern, it's a bearish 15-minute chart, so it's just not our setup. Let's see, JKS 123. Wow, I said it was a bullish pre-market, but wow, that really took off. RCL ripping. Yeah, I mean, low scalp, no pattern, so you know, it's just not my setup. I'm doing nothing here unless something is on its own page. Like, where are we?